Is intensifying as markets remain concerned about global economic growth. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all down sharply today as investors worry about how the latest COVID surge in China will impact global economic growth. Tesla shares tumbling more than 9% today and weighing heavy on the Nasdaq. The electric automaker has a factory in Shanghai which remains in lockdown due to that COVID outbreak in China. But the oil market appears to be shaking off recent demand worries prompted by that situation in China. West Texas Intermediate crude futures rising 1.3% today, nearing $100 per barrel, with Brent crude futures also up 1.2% and nearing $104 per barrel. The surging U.S. dollar is adding pressure for energy traders. The dollar hit a two-year high on Monday, making oil more expensive for other currency holders. And big tech stocks are falling sharply today as the market looks ahead to key earnings from Microsoft and Google parent Alphabet this afternoon. But in earnings that have been reported already today, Pepsico shares rising slightly after beating Q1 expectations and hiking its 2022 outlook. The company reported adjusted earnings of $1.29 per share on $16.2 billion in revenue. That topped analyst expectations on both the top and bottom line. Pepsi did hike its full-year revenue growth forecast to 8% from 6% and reiterated its outlook for core earnings growth of 8% this year. UPS shares, though, tumbling about 4% today despite reporting a stronger than expected Q1 as the broader market falls. The delivery company reporting adjusted earnings of $3.05 per share on $24.4 billion in revenue. That was better than analyst estimates for both profit and revenue. UPS also reaffirmed its full-year guidance for revenue of about $102 billion in 2022. The company did also double its 2022 share buyback target to $2 billion. And Warner Brothers Discovery shares are slipping more than 3% today despite beating fiscal Q1 estimates. The entertainment company reporting earnings of 69 cents per share on $3.16 billion in revenue. That was better than analyst expectations on the top and bottom line. Discovery Plus added 2 million new streaming subscribers last quarter, bringing the total to 24 million. Now, this report did not include results from Warner Media and HBO Max after Discovery's purchase of the company closed on April 8th. Those results were already reported earlier by AT&T, but will be part of the Warner Brothers Discovery report starting in Q2. Now, JetBlue Airways shares are dropping more than 9% in today's session after the company announced plans to cut its capacity growth this year. The airline reporting adjusted Q1 loss of 80 cents per share on $1.74 billion in revenue. Now, that was a smaller loss than analysts had expected. But traders were focused on JetBlue's plan to fly less. The airline's CEO said they are reducing capacity growth further as they plan more conservatively for the summer and make investments to de-risk the operation. JetBlue did forecast capacity growth would be flat between 0 and 5% this year compared to 2019. Now, taking a look at the economic data of the day today, consumer confidence fell unexpectedly this month. The Conference Board's Consumer Confidence Index slipping to 107.3. That missed expectations for the index to rise to 108.5. Consumer confidence in current economic conditions fell more than a point to 152.6 as Americans continue to be squeezed by high inflation. But the expectations index did improve by half a point to 77.2 as consumers express cautious optimism about the future. New data, though, shows home prices continuing to rise at a breakneck pace. The S&P Case-Shiller National Home Price Index jumped 19.8% year over year in February. That's the third highest reading in the survey's history. The 20-city index surged to 20.2%, while the 10-city index rose 18.6%. Phoenix, Tampa, and Miami continued to lead those gains. Prices rose 32.9% year over year in Phoenix, 32.6% in Tampa, and 29.7% in Miami. This jump in prices came before mortgage rates started to surge in March. Analysts do expect to see an impact from those higher rates on home price growth in the months ahead. But new home sales did fall sharply in March amid those high prices and high rates. The Census Bureau reporting today new home sales tumbled 8.6% last month to a seasonally adjusted annualized rate of 763,000 units. And that marked a 4-month low for new sales and was lower than economist expectations for 770,000. Now, new home sales were down 12.6% year over year. The drop came as prices continued to surge. The median new house price was up 21.4% year over year in March to $436,700. But inventory is improving. There were 407,000 new homes on the market last month, representing a 6.4-month supply at the current sales pace. Now, new home sales are a leading indicator for the housing market as they represent contracts signed for a new home to then be built. Economists use these sales to get a read on how higher rates will impact housing demand in the future. And as I mentioned at the top of this video, there are some key earnings reports coming up. Microsoft, Google parent Alphabet, and General Motors are all scheduled to report after hours today, and then Boeing and Spotify are on the schedule Wednesday morning. So be sure you're subscribed to my Coffee with Greta newsletter to get all the details ahead of the market open tomorrow. I'll see you back here for the Wall Report at noon. Give this video a like before you go.